Circular 230 has a few instant trouble rules the EA exam loves. If you remember nothing else, remember this. You cannot touch a taxpayer's refund, you can't play games to stall the IRS, you can't use a disbarred person behind the scenes, and you can't notarize documents when you're involved in the IRS matter. Then we'll finish with who signs a paper return and how. First, refund checks and direct deposits. Under Circular 230 Section 10.31, a practitioner must not endorse or negotiate a refund check issued to the taxpayer. And negotiate is broader than cashing a paper check. It includes accepting or directing payment by any method, including direct deposit or wire. On the exam, watch for Form 8888 tricks. Putting your own bank account for the client's refund is prohibited. Here's the classic fact pattern. Client can't pay your fee, so you route their refund into your account, skim your fee, and send them the rest. That's exactly what Circular 230 is trying to stop. Even if the client agrees, it's still a violation. Also, Form 8888 instructions say the IRS will usually reject a deposit to an account not in the taxpayer's name and mail a paper check instead, so it's both non-compliant and likely to fail. Next, delay tactics. Section 10.23 says you must not unreasonably delay the prompt disposition of any matter before the IRS. That means no run-out-the-clock strategy, like repeatedly rescheduling meetings, slow-walking documents, or sending incomplete records on purpose. The exam will often dress this up as, "Client asked me to delay so they can move assets." That's a bright red flag. You can request reasonable time, but not obstruction. Another easy-to-test prohibition is Section 10.24. You can't knowingly employ or accept assistance from someone who's suspended or disbarred from practice before the IRS. And here's the part students miss. It applies even if that person isn't signing returns or talking to the IRS. If you know they're disbarred and you still use them in your tax practice, that's a Circular 230 problem. Now the notary rule, Section 10.26. You're allowed to be a notary, but you cannot perform notary services for a matter if you're acting as counsel, attorney, or agent in that matter before the IRS, or you have a material interest in it. Translation: if you're representing the taxpayer or you're personally involved in the outcome, you don't notarize related documents. On the EA exam, material interest is the key phrase. Finally, paper-filed return signatures. A paid preparer must sign the return and complete the paid preparer area, including the PTIN. The preparer signs under penalties of perjury and signs after the return is completed, but before it's presented to the taxpayer. The taxpayer must also sign, on paper, that means a wet signature. If multiple preparers worked on it, only the preparer with primary responsibility signs. If the original preparer is unavailable, another preparer must review the entire return and manually sign. Derek is an enrolled agent and also a notary and loan signing agent. Regarding his notary commission, which statement is correct? The choices include: he can't notarize any documents for tax clients. He must resign as a notary. He can't notarize documents where he has a material interest in matters before the IRS, or he can notarize with written consent. Think about it. The correct answer is: Derek cannot notarize any documents in which he has a material interest in matters before the IRS. That's Circular 230 Section 10.26. The tempting wrong answer is the one saying he can't notarize any documents for tax clients at all. That's too broad. He can be a notary. He just can't notarize documents tied to an IRS matter where he's involved or has a material interest. Which action is always prohibited by Circular 230? Options include representing two clients with a conflict of interest, promoting a tax shelter to an existing client, charging contingent fees, or notarizing documents for clients the practitioner represents before the IRS. Think about which one is a bright line ban. The correct answer is notarizing documents for the clients that the practitioner represents before the IRS. If you're involved in the matter before the IRS, or you have a material interest, Section 10.26 prohibits the Notary Act. A tempting wrong answer is representing clients with a conflict, because that sounds forbidden, But conflicts can be allowed with proper disclosure and written consent, so it's not always prohibited.